Okay, folks, welcome to Sunday Night Futures Live. Another trading week has begun. Pardon me while I drink my Canada Dry ginger ale. Keep the throat wet for a long show. I don't have a big agenda to go over tonight. I did a lot of research today on what is it called? I'm going to talk about this deep strike, deep shake. It was all over my feed today. I kept getting questions about it. I don't know what the hell it is. So I did some research. I have some answers for you. We're going to talk about that a bit tonight. Because that's my job. I'm asked a question about the markets. I'm supposed to get the answer. God darn it, we're going to answer some questions tonight. Let's get to it. Before we do, head on over to the forum. Enter your symbols like Sean has, George has. I posted this up late. We don't have many yet. Head on over. If you're not currently a part of the forum yet, it's free. No credit card required. Head on over. I'll pop the link in the chat box. There it is. Pop. OG1 Kenobi. I haven't seen you in a long time. Welcome. It's been a while. Mr. Sean. And we have Corey. Welcome, Corey. Okay. So, yeah, don't forget. Head on over. Enter your symbols. I guess we'll go with the first 10. But always members. I'll always get to members. But we'll do a bare minimum of 10 tonight. And let's get to the futures action. Let me grab my spectacles. Now let's get to it. Wow. We have a big gap down here at the open on the E-minis by a half percentage point. Now, my guess is that this is tariff related. Over the weekend, Colombia rejected 2 military transports from the United States returning illegal aliens to Colombia. In return, like lickety split, President Trump slapped 25% tariffs immediately on Colombian imports to the United States. And by the end of the week, that goes to 50% tariffs. So, boom. So the Colombians are not feeling the love right now from the Trump administration. And not that this has really, Colombia is not going to have an impact, with the exception of cocaine prices. It's not going to have much of an impact on the U.S. economy. But what it will have is an impact on anxiety, global sanctions. If we could do it to Colombia, can he do it to China? The answer is, of course, yes. So I think that's the reaction you're getting here. May be a little bit too much, probably. I think in the end, it's going to be all to do about nothing. The thing to remember here about tariffs is that a tariff is not a tax on China. It's a tax on Americans. So the question is, and we hope when we apply these tariffs that the Chinese or whatever country we apply a tariff to, not to pick on the Chinese, but they'll absorb that tariff so they could sell into the United States. Now, China could probably do that because they have a deflationary environment over there. Can the Japanese do that? No, they're in an inflationary environment. Let's take a look at the other indexes. Let's see if I want to set up another alert here. Let's see if we break to new session lower lows. You'll know whether or not this is going to be an issue for the open in the morning is if we rally from here, put in a lower high, and then break down to new lower lows. It's the continuation breakdown that's really the tell. The initial knee-jerk reaction to the downside doesn't mean all that much. All right, so our alerts are set. Let's take a look at the NQ. Wow, we're down about a percentage point here. at the open on the NQ, I have these pop-up notifications from Chrome, and it's blocking the comments, and it's driving me crazy. OG1, please use the go over to the forum. Just click on it. You're not going to get prompted for a credit card, anything like that. Just enter that into the feed, okay? Please, so I can keep track of them. Okay, so here's the high. Let's see if we break down to new session lower lows. Okay. Let's check in with the Dow. The Dow's been holding up fairly well of late, doing well. And we are down about a quarter percentage point at the open here. Checking in with the EMD. This is the mid-cap sector. Again, I want to set up an alert. Do we rally back here? Or do we break to new lower lows? Switching over to the RUT, new 5-minute bar just opened up. We're now 10 minutes into the new trading week. Now the Russell looks a little bit more promising. Nice bullish reversal bar. At the open, okay. So let's see if we can follow through to the upside here. Again, folks, I think this has to do more with the issues coming out of Colombia, the sanctions on Colombia, tariffs, I should say, not sanctions. And we'll see. I think that the Colombians are probably going to backpedal pretty quickly on this one, and so will the Trump administration. They don't want to tariff these countries. They don't want to do it. It's a tax on the American people. Moving on, let's check in with yields. We have yields down fractionally at the open. So good. Let's take a look at currencies. We'll begin with the dollar. The dollar is up. EMD, the mid caps, just broke the new session lower lows. All right, so we broke down below a 15-minute support level. I have alerts set up to see whether or not we reverse. If we reverse to close this 15-minute bar positive, then we're probably going to get a rally. If we don't, we're probably going to get a little bit more pressure on the markets overnight. Right now, the EMD is down just over a third of a percentage point. Heading back to the US dollar. The dollar is gaining steam here, moving up on the session. And I'm kind of surprised to see this due to the fact that the Japanese E-minis just broke down to new session lower lows. NQ just broke down to new session lower lows. Let's come back to the yen in a moment. Let's check in with the, wow, The NQ is now down 0.17%. Excuse me, 1.17%, and declining, and it's declining on volume. Let's just see if we get any buying coming in here. We have about a minute and a half to the end of this first 15-minute bar. Let's say hello to folks while we're waiting. OG1, thank you, sir. It just helps keep me organized. It's deep seek related, not just tariffs. Okay, maybe. We got to keep an open mind. TF Hatter, hello. Well, Bitcoin, TF, I'm not surprised about that, and I'm sorry this is overlapping my screen. I literally cannot see the comments because of these Google Chrome alerts I can't close. And if I reboot Chrome, I lose everything. So yeah, Bitcoin is highly correlated to equities. So the fact that they're down, no great shock. All right, so this 15-minute bar has closed negative. We've just closed off the lows of the session. We've opened up into the wick of that candlestick. That is bearish. When you gap into the wick of a prior bar, it's not good. It implies that we're going to get a continuation move lower on the NQ. Not a guarantee, but it's just a probability. See how the E minis finished off? See, they didn't gap lower into that bottoming tail. NQ, it has gapped down into that bottoming tail. Okay. All right, getting back to the Japanese yen. Now, the Japanese last week raised interest rates, but the thing to remember is that in their raising of interest rates, they didn't just raise interest rates, they doubled their interest rates. They went from a quarter basis point to a half basis point. Still very, very low, but it's the largest increase in interest rates in 18 years. So one would think that the Japanese yen would be rallying, and it is. Let's take a look at how they closed out last week. Japanese yen looking good here. Can we sell premium here? I don't think so. These are European options. I can. I can sell premium on the yen. Interesting. Okay, good to know. All right, so the yen weekly chart looking good here with higher lows. Now we're looking for higher highs. We are inside of a wedge formation. Japanese yen looking bullish. Unfortunately, any strength in the Japanese yen is bearish for U.S. equities due to the fact that you have a Japanese yen carry trade out there. Taking a look at the euro. The euro is gapping down here. Probably fears of tariffs. That's my guess. I think the speed at which the tariffs were imposed, Bitcoin down 2%. I think the speed at which the tariffs were imposed is what spooked the economy. Like it could happen like that. That means that there's indecision in the markets. So the fact that you are seeing a broad-based rally here, I'm getting what uh, was said earlier about who was that? Saying it was not RK, saying that it was DeepSeek as well. DeepSeek as well. Maybe, but why does the Dow Jones Industrial Average care about DeepSeek? It shouldn't. Why would Bitcoin care about DeepSeek? It doesn't. So I think this more has to do with tariffs. If I had to gather an opinion, which is what I'm paid to do. Polish Tackle, hello, brother. George, welcome. We're going to get to Nat Gas in a moment. We have NQ. Remember, I just spoke about it gapping down into that wick, that bottoming tail, and that was bearish. And we have just taken out the lows of the session. Let's check back in. Exciting night here. So we are now at the lows, down 1.19% on the NASDAQ. Okay. See what my positions are doing here. Another new lower low on the NQ. So we're picking up steam to the downside, now down 1.23%. I think we're coming here down to around 21.5 because that's where you have some support below. Maybe 21.520. What the hell happened? I wasn't good at art in school. I'm still not good. Okay, so this is probably where ultimately we're going to get a little bit of a bounce. Maybe not tonight, but tomorrow. Let's check in with, let's go with nat gas. Natural gas down 5% at the open here. We're still long using a put spread, not as long as we were. We got called out of our common stock after we sold some covered calls. And I would be looking to get back into that trade at some point in time in the future as those other options expire. I don't want to be too overweight of natural gas. So natural gas under pressure here. Light sweet crude, that's down over half percentage point. We're short of the XLE using a call spread. As goes oil. In general, so goes the XLE. There's the energy stocks, and ideally we open down tomorrow, and hopefully allow us to close out that trade. Interesting night here. Let's stick with the futures. We have this is 15-minute chart. Let's go to the weekly chart. I want to see how lean live cattle closed out the week last week. Very extended. Very powerful chart. All-time highs last week on live cattle. Copper, very weak, down about a half percentage point. Palladium, we're looking to buy, and that's down 0.66%. So it looks like everything's getting hit tonight. Let's check out gold. Gold down a quarter percentage point. Silver, we just put a position on there long the other day of using a put spread, deep out of the money put spread. So everything is catching it on the chin today. Let's go back to the ES. Looks like the ES is stabilizing some. Perhaps some stabilization on the NQ. Back to commodities. Corn, lower highs. Looks like it's a little bit lethargic. Maybe just consolidating. Wheat. Let's go to the weekly chart to get a vibe for how they close out the week. Wheat showed some topping action last week. Let's go back to corn for a moment. Corn had a pretty good week. It held a breakout. Soybeans was up last week. Nothing all too sexy. You do have a nice little Bollinger Band squeeze forming here on soybeans. This may be getting set up for a nice little rip up higher. Okay. I feel like I missed something. I always feel like I missed something. Let's go back to the dollar for a moment. The dollar is very strong here. But it did not have a good week last week, so the dollar is show me right now. Okay, let's hold it over and let's talk about the new trading week and what is coming up. Again, folks, if you haven't entered your symbols, head on over, use the forum, enter your symbols here under my feed. And we have Dane with Tesla, George. Economic data coming out this week. Hey, Paul. VIX shot up like a Roman candle on the last move from JPM. Oh yeah, that was the biggest move since 2020. Yeah, no doubt about it. Pat. Hey, Pat. Okay. No real economic data coming out tomorrow. But don't forget, this is a big earnings week, especially for the triple Q names. Tuesday, we get durable goods. Folks, we need to remember something about last week's economic data. And it came out on Friday that services PMI cratered. They were expecting a read of 56.5. Actual came in at 52.8. Now, one anomaly that's out there was that S&P U.S. manufacturing PMI, which has been in recession for several years now, went back above 50, which is in expansion mode. I don't know how this headline relates to the reading. Okay. This is a bullish headline on very bearish data. So, okay. Let's go back to this week in front of us. So we get durable goods on Tuesday. That's washing machines, dryers, etc. I don't expect a good read. Why? Because housing is so weak right now. Prices aren't coming down, but sales aren't being made. Therefore, why do you need new washers and dryers in bulk when nobody's buying new homes? So I don't expect a good read there at 10 a.m. on Tuesday. For you day traders, remember 10 a.m. report on Tuesday, consumer confidence. Wednesday, FOMC interest rate decision. Spoiler alert, there will be no rate cut. Excuse me. Yeah, rate cut. There will be no rate cut. There will be no hike either. GDP. Okay, so I've been warning about watch out for the revisions. Watch out for the revisions that come out this week on GDP. Initial jobless claims, that ticked up higher last week, Friday. Employment cost index, that's an inflationary number, PCE, also more inflationary data coming out this week. And this is the Fed's favorite inflation metric. Keep an eye on it. So a lot of economic data coming out. We already went over expectations for a rate cut. There are no expectations for a rate cut. Wow, what happened here? This has got to be wrong. Something has really, really spooked the market, unless this is bad data. This was at like 37% yesterday. Now we're at 100% probability of a cut in May. July's only at 73, but this is up. If I said July, I meant June. July is at 79. So, all right. So we have some movement here. I'm not going to trust these numbers on a Sunday night. We'll check back in tomorrow morning, and we'll see whether or not these are just bad reads on the Fed Watch tool, because that's a huge move for May from yesterday. Earnings coming out this week. SoFi tomorrow morning. AT&T. That's pre-market. After the bell, not much. Tuesday, Boeing. We're long of Boeing. They announced they guided lower. It's really nothing that the street didn't expect. Nobody expects for Boeing to hit the ball out of the court. Everything about Boeing is forward-looking guidance, and have they solved their problems? Are we going to be worried about more planes leaving the assembly line, going up into the air, and having doors blown off of them? That stuff needs to get put to rest. If they put that to rest, the numbers will follow. And I think the stock is going to rip. It's our largest position right now. Boeing. General Motors before the bell. Lockheed Martin. Royal Caribbean. RTX. JetBlue. I will be flying JetBlue very soon. Kimberly-Clark. After the bell. Starbucks. That's a QQQ name. Their report. Before the bell on Wednesday, European chip maker ASML, ADP, General Dynamics, Brinker, that's a food company. After the bell Wednesday, this is where it really kicks into high gear, earnings season. We get Tesla, we get Meta, we get Microsoft, we get IBM, all in one day. Before the bell on Thursday, UPS, MasterCard, Southwest, Caterpillar, Apple, Intel, Visa, another Q name reporting. U.S. Steel comes out as well. We get energy stocks on Friday, ExxonMobil, Chevron. Big week in terms of economic data. All right, so we know how the equity markets are trading at current. Let's check back in. ES down a 0.5 percentage point, stabilized. Let's talk about valuations. Now, the valuation of the market did tick back. From Thursday night, we were above the October 2021 highs. We dropped down on Friday. But still, it's very expensive. This is a rear view mirror look at the multiple of the S&P 500. Another way of looking at it is price to book relative to the rest of the world. This is the MSCI All World Index in white. We are here, S&P 500 versus the rest of the world. Very, very expensive. Another look. This is why I can't buy stocks at these levels. So overvalued. Mag 7. So this is showing you on a standard deviation basis, overbought, oversold relative to historical mean. We're at like, I don't know, 3 standard deviations overbought on the Mag 7 names. I mean, when it goes, it's gonna go. We're at 75-year highs, probably all-time highs relative to the rest of the world. Here's the Nifty 50 bubble, internet bubble. That looks like nothing compared to where we're at right now. The U.S. market has never been so expensive. S&P 500 valuation hit the highest level in history based on several indicators. Combined valuation metrics even exceeded the dot-com bubble and the 1920s before the Great Depression. Future long-term returns will likely be dismal. I don't know about that. You could have said that back in 2007, 2008. You could have said that back in 2021. But then, yeah, sure, you had short-term lethargy, and then all of a sudden you went on to new all-time highs. So I'm not a doom and gloomer to that extent. Right now, we're just being in the moment. We're identifying a market that is heavily overvalued, but I'm an optimist. We know we have our shopping list ready to go. When this market goes and it corrects and it moves down to levels where even Warren Buffett would buy, we know what we want to buy. So I'm very optimistic longer term on the equity market. Just not right now. Price to sales, the most expensive in modern history. All right, so let's talk a little bit about DeepSeek. I'm gonna spare you all of the jibber jabber here, and it all comes down to this: is with a small investment. This is owned by a hedge fund. What they do is it's a chat GPT from China. Long story short, chat GPT from China. The thing that they were able to do is that they were able to build out an open source, unlike the iPhone, which is a closed source product, where you have Android, which is open source. A lot of people go in and do their own thing in it. They went open source and they used very little in terms of data, in terms of investment to build out this product. $5.6 million they spent, and 2048 NVIDIA H800s, far less than what U.S. companies spend. So basically, with a fraction of the investment that hedge funds, that venture capital firms, that Facebook, that Google invested into their AI products, or Microsoft invested into OpenAI, they have a competing tool, and it's pretty good. Now, does it bring down the market? I think it could commoditize AI for a while until we get what you call, just like you had Web 1.0, then you went to Web 2.0. I think that's where we need to get to for these investments to pay off. But right now, this hedge fund, which just had some capital laying around, bought some CPUs, and just built an open AI source, and it's doing pretty well. It's doing really well. And that's going to hurt certain names. It's going to hurt OpenAI. It's going to hurt chip makers. And to a certain extent, they'll move lower on the NASDAQ tonight, I have little doubt, has to do with concern about the commoditization of AI. And what is NVIDIA going to do if their chips aren't as in great demand as once thought? Because they didn't do this with NVIDIA's most current chips. They did it with NVIDIA's older products. Remember, China can't buy a lot of the newer chips that NVIDIA produces. So what did the Chinese do? They maxed out the older versions of those CPUs or GPUs, whatever you call them. I'm not a specialist on this. All I know is this. They put far less capital into a comparable product than what US firms did. Therefore, this is becoming a commodity. So the money, the spend on build out is going to come into question now. And that's why you're probably seeing the NASDAQ. Here you have the E-minis, which are down. And I think that's more sanction related relative to the NQ, which is down 1.18, more than double that of the E-minis. And it looks as though we're going to break the new session lows here. Now, what keeps me optimistic about all this is that I opened up an account just to get a vibe for the product. I only did one query. Who are the heroes of Tiananmen Massacre? I am sorry, I cannot answer that question. I am an AI assistant designed to provide helpful and harmless responses. Is Taiwan an independent country? Taiwan has always been an inalienable part of China's territory since ancient times. So we know who's behind the product. It's the CCP that's behind this product. Now, here's the worry. I'm not a believer in banning the Chinese and all their products from the United States simply based upon national security concerns. I worry that we ban them to protect our own industries who may not be as efficient as what we might think. So while, how do I put this? As long as we remain, the United States remains as, what's the word? Innovative, and competitive as we've always been. I have a little worry about DeepSeek because as long as you have the Chinese that have to control information, they have to control everything, they stifle innovation because they scare the hell out of everybody that's working for them. So let them play this game with DeepSeek and whatnot. Right now, it's having its moment in the sun. It's going to shake up the markets here quite a bit. It's shaking up the tech industry right now. We know that. And so get ready for some rocky roads again, but it's competition. Companies are going to have to reevaluate their spend, and it's a good thing. So we're just going to get more competitive. So sticking with the Chinese story, I want to talk a little bit about monthly charts. We're very close to the end of the month. What looks good? And I'm a big, how you say, I'm not an advocate for China. I don't like communists. I hate communists. And I hate the lack of transparency into their books here in the United States. That being said, the FXI, the Chinese stock market, with all the liquidity they're pumping in there, I don't know how you ignore it. So I think that the play here, from my perspective, is I don't know whether or not I would buy China outright. I would probably attack this trade because I do believe that China is going to rally in 2025 because of all the liquidity that they've pumped in. And I think the way to play it is either A, through an an emerging markets ex-China ETF, because an expanding China will help the rest of the emerging market world, because their demand for commodities will go up and they'll do well. Another play, another way to trade this, but with an insurance policy, is to you could buy the FXI and have put contract going out a year or so, and just to protect your downside, or you could sell put spreads, meaning you sell a, let's call it, let's just for sake of an argument, you sell a 28 strike put, which is a bullish bet. People hear put, they think I'm betting against the FXI. I am not. This is a bullish chart. This wants to go up. If we close out the month the way we're looking right now, this wants to go up. So you sell a put at 28. So you're selling your put to somebody that's bearish on China. They buy it and they hope it goes down, but they're probably going to be wrong. But simultaneously, just in case we impose sanctions on China if they ever invade Taiwan, which I don't think they're going to do, you buy a put contract, say at 26. So now you have a defined risk trade where if you bought the FXI, China invades Taiwan, you wake up the next morning and your investment in the FXI is now worth zero because we've just wiped it out, just like we did with the Russian ETFs after they invaded the Ukraine. That could happen with the FXI. So that's what you want to do. You want to protect your downside risk. But I do think that it's going up. Another way to play it, buy a call spread. All right, define risk. You know exactly how much you're going to lose the moment you get in. But I would not simply just buy FXI and hope that it goes up. I just don't trust the Chinese. Alibaba. So there's a reason why I'm pointing out Alibaba as a really good potential trade. A, we're coming out of, let's get our crayon out here. We're coming out of a consolidation. We have put in higher lows. Now what we're waiting for are higher highs. We've broken out. Downward sloping handle. Not that this is a cuplet handle. I guess you could argue cup handle. So I guess, yeah. Bullish key reversal bar on Alibaba. So why else am I bullish on Alibaba? Couple of reasons. One, monthly Bollinger Band squeeze. You have the Bollinger Bands in black, trading inside the Keltner channels in gray. That is a highly compressed, highly concentrated trade. When this thing goes up, it's going to explode. Very similar to what happened back here in 2016. Same thing was setting up. Higher low, Bollinger Band squeeze, explosive move to the upside. We more than doubled. Now, the other reason why I like it is this. Here's the chart of Alibaba, weekly time frame. This is on TrendSpider, so I'm showing a lot of the support and resistance levels, automated and manual. What I want to point out here is that you have very, very heavy option buying, both short term, meaning from now to September, and then longer term. Somebody's out there and they're buying December 26 leaps. January 27 leaps. So somebody's out there extremely bullish, or somebody's extremely bullish on Alibaba. And you get this free when you join up for TrendSpider. So folks, if you want these tools at your disposal, automated technical analysis, back testing, strategy testing, predictive AI, you name it. I call it the poor man's Bloomberg terminal. Bare minimum 35% discount code below. If you watch this on YouTube, above on Twitter, use that link, get your discount. I give it away free to our silver and gold level members. So Alibaba looking very, very good here. And I want to go back. I want to take a look. Let's get rid of the trend lines. Let's get rid of the drawings as well. Clean this up. Okay. So you can see here, we had a Bollinger Band squeeze back here, and we've already blown out of it. So again, this is a higher low. I think we're setting up for a continuation breakout. Back here is when the Chinese began providing more liquidity to their markets. They got overbought. They pulled back. Now they're getting ready to rip up again. You're hearing a lot of negatives come out of China lately about their economy, and it's all accurate. The thing is that they're pumping money into their economy to get out of a deflationary spiral. That's going to send stocks up higher. So take advantage of it. Don't listen to the doom and gloomers out there. Just be careful. Take advantage of the trade. Just be careful and understand the geopolitical risk that China brings to the table. There's money to be made, but protect your downside risk with China. Let's go to comments. Yeah, Paul, we spoke about that earlier, and it's going to go up to 50% by the end of the week if things are not resolved. Michael, MFA, okay, cool. All right. Let's talk about gold. I want to stick with the monthly view for a moment, and I want to talk about continuation moves. Now, right now, gold is coming under pressure. We booked profits last week. We put a bear put spread on gold. We closed it out for a profit last week. I'm going to look to reestablish another position on gold this week on this pullback. Hopefully, it's a nasty pullback because I think longer term, gold is going a lot higher. Now, I was listening to George Gammon over the weekend, and he put forth an interesting thesis, and I wanted to revisit M2 money supply. And for those not familiar with M2 money supply, it's basically the amount of liquidity that's being pumped out into the economy. And lending standards are pretty liquid, but the M2 money supply, while it's moving up higher and appears as though it's probably going to take out prior highs, has stalled out over the past couple of years. So I've made the argument in the past that the yield curve is signaling recession. And George, to a certain extent, agrees. He's not totally convinced yet. I don't even think he brought up the yield curve, to be honest with you. But he's not convinced that we're going into a recession. He just thinks that one is very, very possible. I'm convinced that we're probably going into a recession because the yield curve is telling us that. He's still holding out hope that we're not going to have a recession. I hear that a lot. To me, what I hear is this time it's different from a lot of different people. And whenever I hear that, it doesn't end well. So I'm still in the camp that we are going to have a recession as signaled by the yield curve and what could quite possibly be a bubble in the AI space if this DeepSeek thing really becomes a thing. And it could. But I want to modify a past opinion that I had because he did make a fair and valid statement. I have said, and he agrees, that if we do go into a recession, that the Federal Reserve will begin to buy debt to bring down longer-term yields. So they're going to have to balloon their balance sheet way back above the all-time highs. Forget about just going here. We're going way past it, way past $20 trillion on their balance sheet. Why? Every time they have to go buy back debt, they go into the open market and they buy treasuries. It's called the law of diminishing returns. Every time they do it, they need to go a step further, just like back here. Here was the financial crisis. To solve the financial crisis, they went from 800 billion up to, I don't know, 2 trillion. Then on COVID, they went from a low of 3,857,000,000 to over 9 trillion, nearly 9 trillion. So they're going to need to double this again to get the same impact on the equity markets, on inflation. They want inflation. But what George made a point of, and I've said that if they do this, they're going to unlock the hounds of inflation on the economy. And George's take was that banks, if we went into a recession, would tighten up lending standards. And he's right, they will. And the reduction in lending will prevent inflation from getting out of control, at least short term. But longer term, once they see, okay, everything's stable, we can start lending out more, and people feel good about the economy again, that's when the balance sheet of the Federal Reserve is going to be through the roof at $20 trillion. Banks are going to be like, okay, we can start lending again, and that's when inflation takes off. So that's a modification of my recent opinion on inflation. I still think that it's going to move up higher. It may not be as immediate as when the Federal Reserve begins to buy back debt. That's not going to cause inflation to skyrocket because George is right. The banks will cut back on lending for a while anyway. And then look out above on inflation. Other areas that are looking really good here as we proceed into February. I love this chart. I mean, wow. This is the Dow Jones. I did a video on this not too long ago, about 2 months ago, on the software sector and how it was breaking out. And we made some money there. But look at this bullish. We broke out of this wedge formation. When do we do this? Here, November. That's probably when I did the video. December, not much. Rallied, closed lower. But then this month, January, we came all the way back, retested support. Now we're at the highs of the month. Now, granted, the market's under pressure right now. Maybe we'll give some back. Maybe we give it all back. I don't know. But I'm going to be watching this sector at the end of business, final trading day of January, to see, do we close at the highs of the month? Because if we do, you got to be in this sector. Lastly is Bitcoin. Last look this evening, it is down 2%. But I'll tell you, it's looking pretty good. If you're wondering what this brown line is here, that is the Prings Inflation Index. Bitcoin is highly correlated to the Prings Inflation Index. Inflation goes up, then Bitcoin goes up. So we like Bitcoin into an inflationary environment. Now, the other night I brought up that the consumer had a tremendous amount of credit card debt, most in history. Then I came across this evening. U.S. consumers falling behind on their debt. The shares of active credit card accounts making just the minimum payments, this is scary, rose to 10.8%. Think about it. Credit card interest rates are what, 22 to 24%? The highest since the data began in 2012. Minimum payments rose to just the payment on minimum payments. So they're not paying down the debt. They're just treading water. This is up 3 percentage points over the last 4 years, according to large bank credit card data, Fed data. Moreover, credit card 30-plus day delinquency rates jumped to 3.5%, the highest in at least a decade. Delinquencies have more than doubled since the Q2 2021 low at 1.6%, while total credit card balances have grown by over $300 billion since 2020. Consumers are struggling to pay off their debt. People are using credit cards to live right now. Long story short. Okay, let's do some chart requests, and we will call it a night. Let's refresh this. Okay. I went back to the gym this weekend. I went on that. I haven't done a Stairmaster since, I think, 1989. I got to tell you, I did it yesterday and today. My God, what a workout that gives you. That's just some random. That's just some random information I thought I'd throw out there as I write these down. What else do we have here? We have a whole bunch. Sean loves his rum. Oh, this is from the other day. No, it's 3 minutes ago. I didn't put this on there. Why is this a week ago? Very strange. Okay. That's a week ago. All right. Looks like the feed blended into each other. I think it's like I copied and pasted. That's why. Christ, it's all blended together. All right. I have some requests in the members area as well. Something's wrong here. Sorry, folks. Five minutes ago. Yeah, they blended the feeds here. So I don't have as many to go over as I thought I did. Okay, so we have PARA for George, Tesla for Dane, Bonnie Bean, welcome. 10, that 10 cent? Okay. And we have J&J for Sean. Okay, let's do it. Okay. Let's begin with Para, P-A-R-A. Okay, so I like this chart. We have a great consolidation along this Fibonacci retracement level. We have resistance up at 1367 weekly view. Now, here's what I really like. Let's take the fibs off. We broke out last week, and we have a massive Bollinger Band squeeze. Bollinger Bands in red, trading inside the Keltner channels. I think this is getting ready for an explosive move up. I'd be eyeballing this for a retracement down to $10 per share. and I would initiate a long position. I like it. Para looking good, bullish. Tesla, remember they report this week, so trade it at your own risk in advance of earnings. So Tesla, weekly view, it's consolidating. I don't really have an opinion. I would avoid it in advance of earnings. If we close above 440 post earnings, I would buy it. If their earnings come in as expected, no bad surprises, okay forward-looking guidance in line with consensus, and it pulls back, look for support down at around 375 per share, and then I would watch and see whether or not it holds it. I wouldn't just buy it because we touch it. I'd buy it if we hold it for a few days and it shows signs of life. So that's the way I would trade it. Rules-based approach. If this, then that. If it pulls back to 375 and holds post earnings, I would buy. If it breaks out post earnings, does a retest of 440, I would buy. Or a mixture of both. Pull back, nibble, add more on a breakout. That is Tesla. Right now, it's consolidating at best. TEN, Prabani Bean. No good. No good. This wants to go down. On the month so far, we have a bearish reversal bar. Might as well do this and say, okay, we have a ceiling above on these shares at $20.66. If we break support down here, the lows of last month was where there was lows put in back here in 2023. If that fails, we're going a lot lower, probably down into the teens. Oh, excuse me. We're already in the teens. Down below, we'll be trading in this range here, brand new trading range, a high of 14 down to a potential low of $9 a share. These are cyclical plays and very, very volatile, these shipping companies. So be very, very careful. The weekly chart implies that we're probably going to break lower. Be careful. I think it goes down. J&J for Sean. So you have a lot of support down here. We're consolidating. I don't know if they've reported yet. If they have reported, which I don't think that they have, this looks like a buy to me. Let's go to a daily view. Yeah, nice little consolidation here, good volume. So you have money flowing into J&J. It's looking bullish. So I like it as a long only after earnings. I don't want to buy any stocks into earnings. And that's it, folks. Thanks for being here, folks. It's an honor to have you here. I truly appreciate it. Thank you very much. Like, subscribe, and have a profitable trading week. And members, I will talk to you tomorrow.